Published, Friday the 25th of May 2018, print, Disqus Gold COT Report, FuturesLarge Speculators Commercial Total Long-Short Spreading Long-Short 189, 67,798, 72,055, 606,203, 101,318, 676,448, 384,473, 002 change from prior reporting period minus 11,791 minus 10,305 minus 9, 7,137, 1,764,662 minus 14,328 minus 15,356 traders 18 quadrillion 682 trillion 855 billion 150 million 277,182 small speculators long short open interest 54, 55,829, 940,502, 942 minus 2,688 minus 1,660 minus 17,016 non-reportable position change from the previous reporting period COT Gold Report, positions as of Tuesday, May 22, 2018 Gold COT Report, Futures Index COT Report, FuturesLarge Speculators Commercial Total Long-Short Spreading Long-Short 30, 41,127, 8,252, 6,802, 3,189, 33,535, 40,939, 8,401,717, 851716, 6261, 7,061, 8,071,571 traders 9,135 $5,137,710,650 small speculators long short open interest 6,562, 22,542, 065192551, 826 non-reportable position change from the previous reporting period COT Silver Report, positions as of Tuesday, May 22, 2018 US Dollar Index COT Report, Futures Eastern Time. The short report shows open interest separately by reportable and non-reportable positions. For reportable positions, additional data is provided for commercial and non-commercial holdings. Spreading changes from the previous report. Futures and options combined. What does this title mean? A future is a standardized contract traded through regulated exchanges where an investor buys or sells a contract at a specified price for a specific date in the future. The price includes the interest charge due to the seller by the buyer from the date of the contract to the due date. An option is the right to buy or sell a contract at a fixed date in the future at a specific strike price. The difference is that a futures contract is an agreement to buy or sell, whereas an option gives the holder the right to buy or sell. An option holder can decide not to take that right and will only lose the cost of buying the option. His loss is therefore definable at the start of his investment, while the potential profit has not limit to it. A futures contract is usually leveraged, a loan provided, up to 90% of the contract. However, with the owner liable to top up his margin to maintain this 10%, his potential losses can rise far higher than his investment. A long thick buying contract limits its loss to the full price of the item, whereas the short selling contract has no limit except the height that the price of the item can rise to. The Commitment of Traders Report (COT) is therefore a report on the overall position of the commodity exchange, COMEX or NYMEX large. But then again, he might be an arbitrager, buying in one market and selling in another to capture the price difference between the two. He wants to deal as fast as possible so as to minimize his risk of a price movement while he is exposed. We would not put him in the same category as a speculator. Contract-owned contract is 100 ounces of gold, or 5,000 ounces silver. The numbers referred to above are therefore the number of contracts in that position. The net long speculative position is found by adding the large and small speculators bought contracts and deducting the large and small speculators sold contracts. We work on there being 32,150 ounces in a ton. Buy, long. A long position is where an investor, trader, speculator buys 100 ounces by the number of contracts. Sell, short. A short position is where an investor, trader, speculator sells 100 ounces by the number of contracts. Spreading. For the options and futures combined report, spreading measures the extent to which each non-commercial trader holds equal combined long and combined short positions. For example, if a non-commercial trader in gold futures holds 2,000 long contracts and 1,500 short contracts, 500 contracts will appear in the long category and 1,500 contracts will appear in the spreading category. Open interest. Open interest is the total of all futures and/or option contracts entered into and not yet offset by a transaction, by delivery, by exercise, etc. The aggregate of all long open interest is equal to the aggregate of all short open interest. Reportable positions. Clearing members, futures commission merchants, and foreign brokers, collectively called reporting firms, file daily reports with the Commission. Those reports show the futures and option positions of traders that hold positions above specific reporting levels set by CFTC regulations. Commercial and non-commercial traders. When an individual reportable trader is identified to the Commodities Futures Trading Commission, the trader is classified either as commercial or non-commercial. All of a trader's reported futures positions in a commodity are classified as commercial if the trader uses futures contracts in that particular commodity for hedging as defined in the Commission's regulations. 1.3 c. Non-reportable positions. The long and short open interest shown as non-reportable positions are derived by subtracting total long and short reportable positions from the total open interest. Accordingly, for non-reportable positions, the number of traders involved in the commercial, non-commercial classification of each trader are unknown. Changes in commitments from previous reports. Changes represent the differences between the data for the current report date and the data published in the previous report. Number of traders. To determine the total number of reportable traders in a market, a trader is counted only once regardless whether the trader appears in more than one category. Non-commercial traders may be long or short only and may be spreading. Commercial traders may be long and short. To determine the number of traders in each category, however, a trader is counted in each category in which the trader holds a position. Therefore, the sum of the numbers of traders in each category will often exceed the total number of traders in that market. Dig this article, published Friday the 25th of May 2018. Email, print, source, goldseek.com.